Crypto world loves chasing hype. We've all seen the massive 100x gains from coins and meme tokens, but what if the next true millionaire maker isn't found in a moonshot project, but in the unsexy, regulated world of global trade finance? Today, we're taking a deep dive into XDC Network. This is not about speculation, it's about institutional adoption, real-world assets, and the fundamental shift in global finance that this project is driving. We're going to break down the fundamentals, the tokenomics, and the major catalysts, but most importantly, we will answer the question on everyone's mind. How many XDC tokens do you need to hold to potentially become a millionaire? Before we continue, I noticed many of you watch but aren't subscribed to the channel, so if you're enjoying the content, hit that subscribe button to help us grow and continue making videos like this. This is not a financial advice, always do your own research. XDC Network launched in June 2019, when its mainnet went live. The project was founded 2 years before that by 3 entrepreneurs: Ritesh Kakat, a serial tech entrepreneur with cloud computing expertise; Atul Kekhade, a computer engineer who previously built blockchain solutions for major Indian banks; and Karan Bharadwaj, bringing deep blockchain technical knowledge. Their mission? Build an enterprise-ready blockchain specifically designed to solve the $5 trillion global trade finance gap. They wanted to bridge the divide between traditional finance and blockchain technology. And so, the XDC network is an enterprise-grade Layer 1 hybrid blockchain. Forget purely public chains that banks cannot use for privacy reasons. XDC was engineered from the ground up for one goal: to digitize the multi-trillion-dollar trade and finance industry. The key here is hybrid. It allows enterprises to conduct private, permission transactions while leveraging the speed and transparency of a public blockchain for settlement. This architecture is vital for institutional adoption because it maintains both privacy and compliance. The network is fully EVM compatible, meaning Ethereum developers can easily migrate their projects, but XDC operates with significantly superior performance metrics designed for enterprise scale. Now let's break down XDC's tokenomics. XDC has a max supply of 38 billion, with about 18.5 billion tokens circulating, and the rest, close to 19.5 billion, still locked. At mainnet launch, 40% went to founders, community, core team, and advisors, vesting at 3% per year over decades. Another 26.67% was set aside for ecosystem growth. Bounties, grants, dApps releasing at 2.5% yearly. And another 26.67% went to exchanges and early investors. The remaining supply includes 6.66% for the XDC Foundation. The network uses delegated proof of stake with 108 active masternodes, each requiring 10 million XDC tokens. Block rewards mint approximately 5.5 XDC every 2 seconds, and that creates annual inflation of 87 million tokens. But the good thing is that the fees are partially burned, which adds long-term deflationary pressure. There's no traditional staking, but holders can delegate to validators or run a masternode with 10 million XDC, as we already mentioned. How about the performance of XDC? The network claims 2,000 transactions per second throughput with near-instant finality. In Q4 of 2024, it successfully upgraded to XDC 2.0, which introduced maximum Byzantine fault tolerance security with forensic monitoring, 3-second transaction finality, and deflationary tokenomics through enhanced fee burning. Best of all, this speed comes at a virtually non-existent cost. Transaction fees are near zero, often running less than 1/100th of a cent. To me, that seems like a fee structure that's built for global scale and massive enterprise adoption. But the biggest news in the last year centers on integration and validation, and here are some major ones. XDC Ventures acquired the Contour Network, a digital trade finance platform used by Tier 1 global banks. This move is massive because Contour was previously backed by top banking institutions like HSBC, Citi, and Standard Chartered. The acquisition directly embeds XDC technology into the existing trade finance infrastructure, instantly connecting the network to a live massive enterprise user base which has been previously validated by these financial giants. Another one is the announcement of Brazil's Verde Capital that they plan to tokenize $1 billion in real-world assets on the XDC network, which validates its role as a key RWA infrastructure provider. The third example is with regards to regulated access. What I mean is that the XDC Network ETP is now listed on major regulated European exchanges like Euronext Amsterdam and the SIX Swiss exchange. This provides compliant institutional access to the token for traditional investors and pension funds, and solidifies its status as a recognized financial asset. And the final point I want to drive home here is that XDC is emerging as a compliant settlement layer. This is evidenced by the growth in native regulated stablecoins, such as USDC on XDC. Recent data shows over $15 million in native USDC has been minted on the network, underscoring its utility for both DeFi and enterprise finance. Overall, developer activity remains strong. The network celebrated its 6th anniversary in June 2025, and with over 800 million transactions processed since mainnet launch, it maintains consistent uptime and reliability. For an enterprise blockchain, security and decentralization are paramount, and we are about to examine these right now. In the case of XDC, the XinFin delegated proof of stake uses a masternode system which requires validators to have a high stake, setting a high bar for participation. Furthermore, XDC is one of the few chains to have achieved ISO 20022 compliance, which is a global standard for financial messaging, which is non-negotiable for integrating with legacy financial systems. However, no investment is without risk. As a project focused on institutional adoption, its success is heavily reliant on regulatory clarity and corporate buy-in. While partnerships are strong, any significant market downturn or regulatory roadblock could slow down adoption. Furthermore, with a large portion of the initial supply allocated to founders, advisors, and ecosystem development, we, as potential investors, must trust the team's long-term token release schedule and commitment. Okay, now we have come to the fun part, where we answer the crucial question: how many XDC tokens would you need to retire as a millionaire in the coming years? But first, let's see the price history of XDC. When it launched, it grew 500% in the first 2 weeks, and then started dropping, losing almost 97% of its value. Then, in the 2021 bull run, the price hit a new all-time high and grew over 40,000%. Afterwards, of course, it dropped 90% again, and now the token trades at about 5 cents or a 70% discount. Now, let's see how many XDC tokens would we need to retire as millionaires. First, the somewhat bearish scenario. If the price hits the previous all-time high at 20 cents, that would be a 4x from here, and we would need to buy 5 million tokens. At today's price, that would cost us $250,000. The market cap right now is $1 billion, and in the least optimistic scenario, it would rise to $4 billion, which is easily achievable. Next is the base case scenario. This is if the token reaches $10 billion market cap, and that would mean a spot in the top 20 cryptos. But for that to happen, we need to see a 10x move from here. In this base case, the target is 2 million tokens, which would cost us about $100,000. And the cherry on top, the bullish case, which holds riches beyond belief, is if XDC hits the astonishing $100 billion market cap. That's 100x return. Put simply, we grab 200,000 tokens today worth $10,000 and we enjoy the ride to $1 million. You might say this is unreal, but given that Dogecoin, for example, reached almost $90 billion market cap being only a meme coin with no utility, then a $100 billion market cap is definitely possible for a token that has the utility of XDC. Guys, this whole millionaire math relies on something crucial though: the drivers of growth. Here, XDC has a trifecta that few projects can actually match. First is the RWA tokenization, which is projected to be a $30 trillion market by the end of the decade. XDC is built for exactly this purpose. Second, the ISO 20022 compliance. This is the language of global banking, and XDC speaks that language natively, making integration with banks far smoother than other blockchains. And third, the infrastructure play. The acquisition of Contour and the ETP listings prove that XDC is transitioning from a crypto project into a valuable financial infrastructure. This is why XDC remains a top contender in the race to bridge the potential $30 trillion gap between traditional finance and blockchain technology. To wrap this up, here's a broader perspective. Whether XDC reaches the $5 mark or beyond, its trajectory is fundamentally tied to the digitization of global finance. This looks to me much more like a high conviction infrastructure play rather than a lottery ticket. And I'll keep following the project and the development of it over time. In the meantime though, I'm curious to know your thoughts about it. What scenario do you think is most likely for XDC? Tell me your price targets in the comments below, and let's compare today and 6 months from now. Guys, if you enjoyed this analysis, then you can support me by clicking the like button, sharing this video with a friend, and of course, I invite you to subscribe to the airdrops.com channel for more such takes that could be your next winning bet. Thanks for watching, and I'll see you next time. Ciao.